Hello and welcome to our webinar with Dr. Marc Nathmann. I'm really happy to see you here today, and I will just introduce for 2 minutes what our webinar series is about. This webinar is part of our digital project practice webinar series. They are all based on the book series Digital Project Practice. In particular, the latest one, Digital Project Practice on Banking and FinTech. Today we will feature Dr. Marc Nathmann, a very dear former colleague of mine and now legal counsel at ING Bank in the Netherlands. He will speak on blockchain and how it might enhance the world of payments. I'm really looking forward to that. This webinar is based on a book chapter that he has contributed to our book series, Digital Project Practice. We have already 3 books published, and Dr. Nathmann contributed to several chapters to that book series. Today we will focus in particular on the newest one, that is Digital Project Practice for Banking and FinTech. For those are interested, a little teaser in this context. You can also buy the book, and for the participants in this webinar, we have a 20% discount code with the code TE20. You can buy on the publisher's website the book. I will also give you that information in the chat. I will also invite you to join our group. We have a group on LinkedIn where we can further engage and discuss on this topic. So scan this code here or enter the link and join our group and join the discussion on this interesting topic. So that's having said that, without further ado, I want to hand over to Dr. Nathmann and his presentation.
Yeah, thank you, Tobias, for having me. I'm delighted to share some insights and ideas with you. And I'm also happy to have a short or intensive discussion at the end of my presentation on your views of this topic. First of all, thanks, Tobias, for introducing myself. My name is Mark. I work at the legal counsel with the ING Bank NV, so the global ING group. I'm within the legal department in charge for innovation topics. So also for our topic here, all about blockchain. And I have a long history of working on blockchain projects in the securities area. And since approximately 1.5 years, I'm trying to focus on one practice area of blockchain, which in particular I assume as being probably the most helpful and most interesting innovation within the financial sector for the coming years, and that is blockchain and payments. Because enhancing the world of payments means making the world of payments and making the world going a little bit better than it runs right now. However, I would like to present you, and that's on the agenda too, the latest developments we are currently seeing in the field of payments. We'll try to introduce the players, and there has been lots of innovation in this field within the last years. And currently, that is my feeling, it is a little bit uncertain to see who is really in the driving seat, because if you think of payments, a classical payments is made within a national currency such as US dollars, such as Singapore dollars, or here in the European Union, the euro, which was one mean of payment or one currency, the first worldwide, trying to cover a certain economic area. That was one of the core goals of the euro. But within the last years, there have been lots of so-called alternatives to state contributed state, let's say state owned and state issued currencies. The first one, called a challenger to fiat money, what we call, or what lawyers used to call official currencies, was the Bitcoin. I don't want to spoil, but if you ask me on my honest impression and opinion, of course, Bitcoin is much, but not an alternative to currencies. However, there have been established, based on blockchain technology, based on core ideas of Bitcoin, various other projects, various other ideas, and various other currencies. And also, national banks, central banks, are heading towards the direction to make payments more feasible for various types of, especially use cases within certain IT applications, within IT environments. And central banks also feel the pressure that payment, especially international payments, is a very complex, inefficient, and sometimes a business full of hassles. And that is what my agenda is about. I want to talk about the players, the alternative currencies from the private side and from the official central bank side. And of course, one of the core questions where I would be delighted to have a discussion on is the pros and cons on alternative currencies, so-called private money. But let's give it a start. And Tobias, if you could put the next slide on the screen, please. What is currently happening? International payments are cost intensive and inefficient. That is not only my opinion. I think you will not find easily any guy in the field of international payments who would call an international payment transaction, whether it's a quite easy one, like selling an Amazon good from the US to Europe, or purchasing, I don't know, a toy from China um, to a buyer in Europe. In international payments, you ever have the problem that you're dealing with two national currencies and you have to convert one currency into the other, and you need lots of players in between to make the transaction work between the payee and the payor, depending on the relevant point of view. Um, why is that? This is true for the, let's call it, private sector, for private purchases, buying toys, buying cars, buying housing, whatever, or sending money to another person. Like Tobias in Bangkok, if I was sending Tobias money, I would run into this problem, and I would run into this problem especially if Tobias and I, or you and I, would do business together. So if we would have a transaction on barrels of oil, of financing a cruise ship in the South Sea or in the Caribbean, or we would face this problem if we would buy a business in China, for example. The problem is the many actors in between. But you must imagine, if you push your button in your online banking, send 100 euros to Tobias' Thai bank account, your first addressee of the payment, of course, is your bank. Your bank will send your payment to the central bank. The central bank, in my case, I'm sitting in Germany right now and working and living in Amsterdam. For me, it's the European Central Bank. They would take this payment, send it to the central bank of Thailand. In between, you would convert euro into, oh, Tobias, help me out. The name of the Thai currency, I've forgotten. I prepared this morning, but I forgot.
Thai baht.
Thai baht. Yeah, thank you very much. And into Thai baht, and the Central Bank of Thailand has to take the converted euros into Thai baht put it on a account Tobias Bank has with the Thai central bank, and Tobias Bank will put it on his account. And if you take it to the end of the chain, sometimes later Tobias is going to an ATM and receiving cash money. So there are at minimum 4 actors in between. And if you take a card transaction on top, you will have Visa on top. If you imagine every bank has a service, a distributor, and not only one in between, you will speak for one single payment of, let's say, 100 euros or so, or 100 bucks in US dollars. You got to pay and bring the payment over 10, 15 actors. And that is time intensive and it is cost intensive. And business is running 24 times 7. And if you want to run your business 24 times 7, you have to be able to react in the same short time window you have, within the short time frame you have. And in international transaction, often something that costs you time is payment transactions because they cost lots of time. So what do we have right now? We are talking about real-time or so-called instant payments. There is a new regulation within the European Union with the obligation for every particular European bank, or not European bank, European Union bank, because not every state in Europe is member of the European Union. However, this regulation only applies for the European Union. Every single European Union registered bank is obliged to provide customers with real-time so-called instant payments, but also these payments, they work instantly. Instantly means within a time frame of a couple of seconds. This opportunity is there. The technical infrastructure is there. However, also this type of payment is, first of all, relating on official currencies. So it applies only for euro payments, instant payments between euro and US dollars or Thai baht or Chinese yuan, whatever you may think about, are not at a first attempt covered by this regulation. And sometimes, or in many use cases, instant payments with currency transfer conversion are not feasible or not that easy. And also instant payments run the normal circular over all these involved parties, central banks, and. And of course, the two banks, pay bank, pay your. What is crucial for payments, especially international payments, is security. And that is where blockchain technology enters into the field. And not only blockchain, when I speak about blockchain, to be honest, I'm a lawyer, not a technical expert, so I'm mixing technical stuff sometimes. So I try to make it easy for me and hopefully for you too. When I speak of blockchain, I mean all the technology behind blockchain that makes blockchain running, including decentralized finance or decentralized networks. And these networks on which blockchain project and blockchain technology is based are first of all very, very safe. They are first of all safe because they, where you can be more or less anonymous within the network. You can act anonymous. If you act open, that is usually because you're not allowed to act anonymous because of KYC regulation, fraud rules, anti-money laundering legislation, and so on and so on and so on. But purely, the technology would allow you high grade or high rating of anonymity. So this is one core goal that makes the technology very, very safe. And the other thing that makes technology very, very safe is that basically blockchain technology can work with certain types of coding that secure transactions and make sure that only a payer and payee, they're identified and the payment is matching between the legal entitled parties whatsoever. This is the core idea what Bitcoin is based on. However, Bitcoin network never appeared to be an alternative for payments transactions because it is first of all too slow and the volatility is too high. Because if you want to make payments, it only works when €1 is tomorrow worth €1. I'm not talking about inflation issues, of course. Yeah, let's keep it simple. If you're paying in Bitcoin, you can have the situation you pay today €1 and this euro is tomorrow worth €10, which could be good for you, but it can also be 10 cents because volatility is high. It is not stable because Bitcoin is used more as a mean of investment than of a mean of payment. However, the idea behind it is in general feasible for payments. So you can use so-called coins, so parts of a blockchain to create means of payment. That is possible, and that is also a way central banks are thinking about. I think one of the first major movers were the Chinese with the digital or electronic yuan, and many other central banks in the world were following this trend. Last but not least, the European Central Bank is hardly working on a so-called digital euro or e for electronic euro. To have, let's call it, a state-controlled alternative to blockchain-based private money. I will come later back to the point what that in particular is. Tobias, if you would be so nice and go one slide further. So who are the big players? First of all, it's big techs. You all probably heard of Libra. That was, I would call it, that was the starting point for digital euro, because some years ago, Facebook mentioned, not mentioned, they very, very clearly addressed that they have something on their desk, a private money, such kind called Libra, which should be a means of payment for various IT related services. And this could have been, you only have to imagine the market power of Facebook, of Google, of Amazon, whatsoever. If one of these players creates their own money for their own business environment, you will have a virtual payment area that is bigger than the European Union, for example. And this was the first shot. Every central bank, in particular the European Central Bank, they heard that shot and they were really feared. You can't call it different than feared, because they were fearing the control about their currency. Because imagine there is one private player that has a real alternative for an official central bank controlled currency. This can provoke many, many issues, especially if it comes to stability of the particular currency. So the other player is central banks. And central banks are usually, they are themselves regulators, or they are on the same side like regulators, so both on the state side. And the fourth player, of course, is the traditional banking industry, an HSBC, a Deutsche Bank, a Commerzbank, and of course, an ING. These are the big techs. They are the new kids on the block. What hinders them to having entered already the field of payments? It's regulation, basically. If you want to provide banking services and also being involved in payments transactions, it is usually a banking service. You need a license from the European Central Bank, from the Central Bank of Singapore, Bank of England, whatever, or from the second in the US. And all the big techs, they're usually missing licenses because licenses and being regulated is a pretty expensive business because you have to run your compliance policies. You need lots of stuff. You need to pay lots of guys like me, lawyers. And of course, you have to obey all the rules that apply for banking business, and that is a lot. So these new kids on the block, however, they could be applying for a license. That would be possible. Some players are doing that on a not on a what we would call full banking license, so for all the banking services, but for banking services in particular, they currently need. The central banks should be, from their nature, in the driving seat. What we see, they are driven by technology, by innovation, and by new players entering the field. And same applies, of course, for the banking industry, because we keep on doing what we have done since years. And now there are entering competitors in our business, and we have to think about how can we deal with them. There is basically two possibilities. One is, that is my favorite, of course, be more innovative, or at least as innovative as our new kids on the block are, or then I can probably maneuver them out, or and compete with them, of course, or I can cooperate with them. And I think the truth is somewhere in the middle. And if you could move over to the next slide, Tobias, because we have one big advantage if it comes to payment and if it comes to blockchain. We have a very, very strictly regulated level. We call it regulatory level playing field, in particular within the European Union, but also in other regions in the world. For example, within the US or in Asia, in China, wherever in the world, every single banking and payment service is strictly regulated. And if you bring a modern technology in the market that enables you to do payment transaction, you are usually in a regulated environment. And even if the certain business you're doing is not yet regulated, it will be regulated in the very near future. We have seen that with Bitcoin. When Bitcoin appeared on the market, there was a huge discussion here in Europe. What do we do with Bitcoin? And the first idea was, it can't be true that there is something that is halfway in between a financial instrument, so let's call it in a nucleus, something like a stock or something like a payment meme. Nobody those days knew really what a Bitcoin should be, especially lawyers didn't know. But we had all the feeling this is something that has to do with banking services. It has to be regulated, and it became regulated very, very quickly. I don't want to go too deeply into the details. There was long discussions with lots of court appeals and so on and so on. The current situation is in Europe, we have now a regulation that is called MiCAR, and that covers and treats Bitcoin like what it is, a financial instrument. And the same applies for alternative to Bitcoins, the so-called stable token. Stable token are also means of payment, basing usually on blockchain technology. The huge difference is that that is why they are called stable coins, that they don't have such a high volatility like Bitcoin, because they are stabilized with a natural stabilizer, a basket of existing currency like euro, like US dollar, like yuan, you name it, that are bought and that keep the particular coin, the particular stable coin, closely related to the exchange rate of the currencies in the basket. And also these stable coins now within Europe are regulated under MiCAR. So if you provide payment transactions stablecoin based, or if you issue stable coins, you will be treated like other competitors in the market. So let's call it like banks. So you have a regulator, you have strict rules, you have to obey capital requirements, and so on and so forth. So whatever you will do, if you want to provide payments transactions, you will be definitely closely regulated, even though you are doing something like creating private money, in the meaning of you are creating a mean of payment, which is not an official currency. And the idea behind that is excellent, because such means of payments are easily usable within certain networks. You can easily imagine, for example, Amazon issuing a stable coin for all the payments within the Amazon environment, which is covering the whole world and various fields of business. The other alternative is, if you go further to this place, is CBDCs. CBDCs is a shortage for central bank digital currencies. And that brings us back to our core question: who is in the driving seat? Central bank's digital currency, if you put it in very, very simple words, is a usual currency that is digitalized. So you turn a euro into a coin that is usable and basing on a comparable technology like, for example, stable coins and or bitcoins. And these coins are issued by a central bank. So it is official money and an official mean of payment. That is in every state in the world, given I don't know every state in the world, but in every state I know, you have to differentiate between official currencies and unofficial currencies. So an official currency like euro or like digital euro is a mean of payment that has to be accepted everywhere. So if you are a businessman, in every case you will have to accept euros or digital euro. This does not apply, of course, for private stablecoins. If Amazon would issue a stablecoin, you as a businessman would not be officially obliged to accept Amazon coins. Probably if you're in a business relationship with Amazon, they would force you, but they can only force you to a certain point. The state can force you everywhere, including probably imprisonment, which is hopefully not true. If you don't accept euros, you won't go into prison, but they will force you in another way. So there was one front runner I already stated, that were the guys from China. They were the first runners to issue an CBDC, and now the digital euro is approaching at the horizons. However, most of the details are unclear, but there will be a digital euro within the next years. And coming back to the core question, who is in the driving seat? My personal impression is the digital euro is not, or it's not being created by the European Central Bank because they see so many use cases, because they want to solve a particular problem. They simply planning or a digital euro, and they will issue a digital euro because they are forced by the powers of the market to do so, because they see that there are alternatives to official currencies coming, and they are coming because there is a demand for such means of payments, because payment transactions are so inefficient, over complex, and expensive. And That makes central banks think, and that is why they are forced. And that leads to the last slide, private money, why and why not? So in my opinion, I leave that to the discussion. But in my opinion, I'm not against private money because private money will appear if there is not an official money like CBDC alternative, simply because there is a demand for private money. Whatsoever, it is a dangerous situation if private money becomes more important and broader use than official money. Think of states like you will find them in South America, or you will find comparable situations just in front of our borders, of the European borders, for example, in Turkey. In particular states which show high rates of inflation, what will happen? The official money will go back and back and back and back because the people, they will trying to pay in euro, in US dollars, in other types of money than official money because they are losing trust. And that is a situation that should not happen. It can happen in times of high inflation rates, but it can also happen if states and central banks ignore innovations and demands in the market. So in a perfect world, and that is what I'm hoping the world will be in the very near future, you will have private money for certain use cases with stable coins closely connected to official money for particular use cases in certain business environments as an alternative, but you will have also official money in digital forms for various use cases and broadly accepted and democratically and officially controlled and regulated. And before I open the discussion, I brought you a quotation of I know Milton Friedman, is a guy where the opinions go from this to that. But I think this quote of Friedman, and he definitely, you can think about what you want, but he is, or he was a smart guy, and he brings it on a point. Money is a very powerful thing, which you hardly notice when it goes right, but which you can create havoc when it goes wrong. And we are just in the situation currently where it can go in both directions. So thank you for your attention and happy for your questions, and even more happy for your personal opinion.
Okay, thank you very much for this insightful presentation. So I'd like to open the floor for questions. You can either unmute and ask or put your question in the chat. But maybe upfront, one question from me that when you started your talk, you introduced that there's quite a number of people involved when you make a transaction from, let's say, the Netherlands to Thailand, and there are the bank of the sender, then there's in between central bank. Very often there's also then a correspondence bank involved if they don't have things like that. Who do you think is the first one to profit from a blockchain transaction, and who might be someone who is maybe that one who face some issues with their business model?
Oh, that's a critical question, pointed towards even when I'm a lawyer, I'm a banker too. The losing guys, if we would talk really to bring it to an end, to make peer-to-peer transaction blockchain based, who will lose? First of all, banks. But we will end up being a service provider. Same applies if big techs will enter the field more and more aggressive. Classical banks, we will end up as service providers. And the second party they will lose, and that's a core question, who is this party in particular? First approach, central banks, of course, because they will be losing control of money, especially of exchange rates. And it's you could be or have the opinion, okay, there are central banks that are losing money, but the shareholders of central banks are the states. And the controllers of central banks is the people, because every single central bank in a democratic state is at least controlled by the public, not directly by the parliaments, but they are bound to the rules of parliaments. Private players, they are not in this strict sense. Yeah, there's another interesting quotation. Banking is necessary, banks are not.
I think this is attributed to Bill Gates.
This is attributed to Bill Gates. Yeah, and I think he is right.
Herrschaft, you have a question or comment?
Yes, thank you, Mark. This is Keshav. I was a student of Dr. Tobias in AIT. Now I'm in Nepal. Thank you for the presentation. I have two questions. One is about the digital currency from the central bank. Like the reason why we want to have blockchain or even like digital currency is like to avoid these middlemen players, right? To avoid the centralized control. So having this digital coin from the bank itself, will it not be like same? So we will not be able to like leverage the decentralization benefit, right? So how will it play out? First question, yeah.
Well, let me first answer your question. That is a crucial point, and that is actually the discussion when it comes to digital euro, where the whole industry, including the central banks, are in. Because if you look on the structure that is intended for digital euro, and the same, I would guess, applies for most of other CBDCs, is that you have lots of lobbying work before introducing. And everyone who is going to lose something or fearing to lose something is lobbying that the construct will not bring him in the loser position. So the digital euro, which is or how it is intended right now, and I would guess that it will not dramatically change if it comes to its construction, will also need banks. So I understand your question right, that you're challenging, is there a benefit for digital euro? If you only look on payment transaction, no, because you will have a central bank issuing the digital euro and being or acting as a technology provider for the digital euro. That is what central banks are now if it comes to normal currencies. And you will still need and have banks because you will have your digital euro as a mean of payment on your bank account, counted to your bank account. So if you purely look on the payment stream, my clear answer is no, there is no benefit. There is one benefit you have. That is, first of all, the timing. It goes quicker. We can reach instant payments also via the traditional system. But the traditional system has weaknesses, especially if it comes to fraud checks. They often fall back because of the short time period. And since basing on decentralized networks, even if they are run over, I'm not a technical guy, yeah, so please have that in mind. If it only runs over the IT infrastructure of European Central Bank, the advantages if it comes to IT security of a decentralized network, they will be still there. So it makes it, if it comes to safety of payments, there is an advantage. If it comes to speed and safety, there is an advantage. And it will be, hopefully, and I believe it will be much easier to use in virtual cards, virtual means of payments, for example, integration in mobile phones, integrations, virtual integration in your payment accounts, and so on and so on. So there are advantages, but few advantages. It's simply they're driven.
Yes, Mark, thank you. Yes, we have advantage even if it's again centralized like fiat currency. Yeah. And my next question is like countries like Nepal, like we have blocked cryptocurrency and we are not very like in a position to adopt blockchain network. Like how do you think like the future will be for developing countries, like in terms of the blockchain adoption and like processing?
I think it's both. First of all, it's a risky business. Not every developing country, but many developing countries, especially if they start developing quicker, they usually see a higher rate of inflation, and then you will probably run into the problem that people are looking for alternatives to the official state currency, and that is the effect that you will, and that is a real, probably a hazard for developing countries if you then have private money or, for example, or easy alternatives within the country like bitcoins or so on. You see that in Venezuela, of course, that you lose control about your currency, and that is the worst situation that can happen to any country, especially to developing countries. The good side, and that is I'm an optimistic guy, what I'm hoping is we see that in Africa, not if it comes to bitcoins, but if it comes to, for example, mobile-based payments, paying with your mobile phone account, that brings access to payments and to banking infrastructure all over the world. So everywhere where you have internet connection, you will have banking services. And banking services are crucial for every developing business and for every private person. And I think if you look to Africa, you can see it has worked out in the past. And with more and more innovation, more and more technology, if it comes broader and broader and broader, it will be helpful for many, many developing countries. But the core question is remaining, and that is a typical question. You don't, or you shouldn't, no, you may not lose trust in what types of payments you are using there and you are basically allowing.
Yeah, thank you. Thank you, Marc.
I think the trust topic is a very crucial when we speak about blockchain, because when it's down to really the underlying mechanism, then you could argue that it's a shift. You shift trust from the system. People trust that the central banks maintain the value of the money towards technology, and people trust in the technology of blockchain to keep it. However, that might be difficult, because if you really trust it, then you need to have the control and you need to host your own wallet. And that might be for some nerds a quite viable option. But I'm not sure if this is something that everyone could do, and I would recommend it to my grandma. Or is this difficult? And if you then use some technology provider to host your wallet, then we know what can happen with FTX and others. So maybe we need to have the usability, and we need to have something like big tech or banks that actually help us to maintain the security and usability of that.
Exactly. That is the core role of banks, of established banks, and also of central banks. And I mean, trust is a question, it has to develop. And until you can explain or recommend it to your grandmother, Tobias, we will be grandparents. That is usually how long a modern technology takes to build trust in a worldwide reliable sense. It's a question of generations.
Yeah, I think so. But it's also, I think we are now at a point where the technology becomes interesting. Now, when we think about the Gartner hype cycle, and at some point where everyone wanted to join the Bitcoin and all the other altcoin races up there. And then we faced something that we now refer to as crypto winter. and it's something that people now faced some really headwind in this context. And I think now we might be at a point where this hype is over, but also the fear is maybe also a little bit over, and hopefully we get to something like the slope of productivity, and we find serious business models to use it. And that might be, again, something in the middle ground, that it's not a pure technology driven outside of any control, but maybe we can use that technology within the system to make cross-border payments more robust and more transparent. At the moment, you need to put not only to play the game, but also have collateral on accounts and correspondence banks and all that. So maybe here within the system, technology could help us to streamline the overall process. And I think this could be quite promising.
Exactly. And I think their projects, especially like CBDC, which are official ones, state ones, they will help to shift and enhance that. That I would definitely truly believe, and the rest, the time being, will show.
Thank you so much for sharing your insights. Again, if anyone is interested to learn more, Marc wrote down all this and a little more in our fantastic book, Digital Project Practice for Banking and FinTech. I can show it here to you now. It's blurred out, but you can find it in the bookshop of your choice or library. And you can get some discount if you use the code that you will find in the chat. Thank you so much for sharing your thoughts. Thank you all for participating in our webinar. And I'm looking forward to see you soon. We will continue the series. Our next talk will be on 14th of June on the topic of embedded finance, making finance invisible. So see you soon. Have a nice day. Good afternoon to Europe. Good evening to Bangkok. And bye-bye.
Bye-bye.
Thanks for having me. Bye-bye.